Hey, so in this strategy, we're going to go over the previous day high and low of a candle based off the daily chart. So I'm already on Euro USD. We can see already this was Friday's candle. So we clearly see we had some bearish momentum to the downside. So all I want to do really is you can take a trend line or you can use a horizontal. Um, I think I'm going to just use the horizontal. All right. So we got here. So you see this. You know what? Let's do this. I don't want to do that. I want to use. There's another one I can use called the Ray. So hold on. All right, if you want to, you go up here to Trendline Tools, and you see it says horizontal ray. I'm gonna select that. In fact, let me go ahead and add it to my favorite. So if you hit this star, it's on my favorite. So now it's on the actual screen as well too. All right, so now I can do this. All right, you see that? And I want to do this because this allows, because a price chart is going to formulate to our right. Remember, every time we look to the left, that's the pass. All right, so I also want to go ahead and do this. All right, so this was the previous high of Friday, and this was the previous low of Friday. So it closed. That was the lowest that it went. All right, so in this strategy, we basically want to, well, so how this works is you basically don't do anything until either this high is violated or this low is violated. You don't play around in here. Now this is a whole different type of strategy, but some people can use it. So let's just go back and let's look at an example. So let's just look at this example right here. If we would have came into the market, we would have did this. All right, and we did that, and let's do a bar replay. All right. So let's act like, hey, all right, we're in the market. What are we gonna do right now? Nothing until what? If this is violated to the downside, then you would look at the downside. If it violated to the upside, you look to the upside. Of course, you look left and you can find your targets. Let's do this. All right. So you see, we cleared. All right. And then of course, when you do this, you can go and look down on some lower time frames. We will see other targets, but at least on a daily, it gives you some form of where you should be looking to enter. Okay. So let's do this. Let's go ahead and just finish this on out. All right. So now we're back in real time. Now let me see if we can move these. Yes, we can. All right. So let's pretend this was a previous day and that was the low. Then look what happened. It broke. You take the trade. Now, where stop losses go? This gets a little tricky. If you're going to be trading on a daily, that's a lot of pips, right? So if you want to, you can set your stop loss still above the counter that got eliminated. You would just have to have a huge, either you're going to have a lighter position that could withstand that. Because let's see. Uh, yeah, so that's 72 pips in the opposite direction. So you definitely want to go low. All right. But if you're playing with a $2, $3, maybe $1 lot size, you're basically telling yourself, hey, I'm risking $72 to potentially, I don't know if you held it this long, maybe 93, because we were trying to get back to this area right here. But that's something that you would have to play with. Those are one of the rules. But if you're dealing with the daily candle, you're going to have to think about that. There are some other rules you can do as well. Too is cutting it in half. You just do basically 50%. So how does that look? All right, let's look at this one right here, and I will draw up your fib level, right? So we'll do something like this. All right. So basically, you will have a protected stop loss in and say, hey, if it comes back 50%, I'm out. All right. point blank, you're out. But once again, these are rules that you can put in place. So if you do it 50, you still at 72 something pips right there. You know what I'm saying? If you get all the way up here to 160 something pips. Okay. Now, here's the beauty, guys. When you go on a lower time frame, you may see something different. So in fact, let's go on down to the lower time frame and let's just look and let's see what we can see. And we're just going to focus in this area right here. And we're going to go down to, let's say, the hourly. All right. So we're on the hourly. And this basically, was it this one? Let me go back to the daily so I can make sure to take off some of these. All right, let's take this off. Yep, and this off. All right, now we're working. Let's go to the hourly. All right, so this is what we're working with, right? So, so the market's not open, so it's closed. So if this level violates, you may say, hey, all right, so based off of this level, you still could maybe look at 50%, but let's see what this would look like if we break here, but all of a sudden we get a pullback. All right, so now we're talking. So this is about 40 pips or whatever. You may say, hey, I may have a 40 pip stop loss. I'm out. Now, if you want to come all the way back up here, you're talking about 81 or so. So you definitely want to be able to play around. And I don't want to give any rules because, for one, I don't really use this strategy, but I'm going to play around with it and test it out more because it's still part. It's like the bar elimination. So you do know I do use the single bar elimination or the engulfing bar technique strategy. So I do use that, but I normally use it on lower time frames. I rarely use it on a higher time frame. But I'm seeing here that there are some opportunities that possibly could play out for us by looking at it. But I have to play around and actually get, you know, to set the actual criteria for what a stop loss should look like. And that's why I would really recommend, and if you're going to even try this strategy, really go light, between, like I said, it depends on how big your account is, maybe $1, $2 lot size at most. But some of you who got a smaller account, definitely between a 10 cent to maybe 50 cent lot size, and just keep it moving. Okay. So let's do this. Let's go and let's do a crypto. Let's do let's try Cardano. Cardano USD. All right. Levels. So we're on a daily. We're going to do it. Also, you can change your color. So we're already 4 hours in. 4 hours left on this daily. So essentially, we would have to do it based off of this right here. So really, we would be looking already for some buying because it looked like it's almost about to break. Not yet. And let's right click this, go to settings, and we can change the thickness of the line. Let's try this one. And what color do I want? Let's do yellow. All right, let's do that. All right, so there we go. And we got the second one. That was the high of yesterday. And this is the low. So if we break this, we'll be looking to try to get back up into this particular region up here. Also, this could be a retest of right here. Why? Because this was support. Support was broken. All right, we may be trying to get up. So if I was trading this, I'd be looking to trade it and I get out in this region right here. Okay, so that's one of the ways you can look at it. All right, so let's look at this one right here. So let's say for whatever reason you was in the market and this was the previous high and this was the previous low. All right. And so you definitely want to see how this would look because we do get a little bit of a break, but then we collapse. So the question would be, if you went long, where would your stop loss be? You know what I'm saying? And so these would be the moments where we probably want to go ahead and start looking like, okay, I got my levels on the daily, but I really want to see what it look like on the web. Maybe the hourly. You can do 15, whatever you feel is best. But look what changes, guys. All right. We see a little bit of different structure. Right. We see a double top come up. All right. So that changes the game around. But you see the structure looks totally different when you go down. So I recommend, if you're gonna do this strategy, definitely do it on the daily, but then go down to the lower time frame so you can see more of market structure. Because look what happens. If you go up to the daily, really not telling us much, right? When you're looking at one candle, because in reality we're looking at this bullish candle, right? That's just not enough information, right? But if we go lower, we can see. All right, so take this right here, all right? This candle right here, all right? So this is what we would have had. We would have had this, and then boom, look at this break. All right, we broke here, but what does that really look like on the lower time frame? So let me put something there so when we know to look when we go on the lower time frame. So let's go back down to the hourly. All right, so we in this area. All right, so you see what we're seeing. Okay, this is what we would have saw, and we get this breakout. Then we got to retest to the area again, and we're trying to fight to get back up here, but we never did. But we created a double top based off of this. So that's why I said go down to the lower time frame, play around with it, so you can get a good feel. Everything that we're doing in trading, we really want to be like, okay, how can I minimize my risk? I mean, that's the most important thing. So it's developing that. Some people are real strict on um, rules based, which is fine. It's cool. But you're gonna start noticing that a lot of what we're doing is really intuitive, to be honest. Okay. All right, let me clear some of all this stuff off. So I'm doing Walmart. So this will be the last one. And let me take off some of these indicators so that stuff will look good. All right, here we go. And so Friday we had this there. It's the previous high, previous low. So Monday, tomorrow, we'll be looking. Your job is to not do anything because it's in here, right? So what we want to see, we'll say the next candle when it forms, are we gonna get a break up, or we're gonna come down here and we're gonna clear this? Once again, it's gonna be better to go down to a lower time frame and see now that looks a lot better, right? You see that? It looks a lot better. Okay, we could play with this. I could do this. Even if I did take a breakout, I can know that hey, this is an area of recent structure where price did collapse down. So I do know that this could be a target zone that if I want to take this trade, I could for taking some option contracts or whatever. Boom. Now, look, what if we get a rejection and we coming down here? Well, we're within range, so we're not really doing anything. We're only playing it based off of breaks. So, if some of you familiar with my other trading strategy, well, I call it the bracket. You're just bracketing, all right? So you do bracketing. So with bracketing, of course, you're doing more of a different level. So like something like this, it's similar. It's here. So when we look at a bracket, we say, well, we're not doing anything until we get a violation. And there's multiple ways you could trade this too. Meaning that if you did get this break, some people are going to take it as soon as a break, or some people wait for what? A retest. Well, here's something you need to look at too. This broke, but we never really got a retest yet. So could this be pushing up to get a retest? Possibly. We don't know yet. That's why I said it's possibly. All right, we still could come up here and then do something like that. So don't be amazed if we come back up here and create a double top because they just had good earnings for Walmart, but at the same time, we do know that a lot of times after Walmart has its earnings, it also has a nice little correction. All right. So how do we know that? Well, let's go back and let's look. All right. So we see right here we had what? Earnings was green. It was good. In fact, they beat. So estimate was 1.3 billion, I believe. But they did 1.5 billion. To be exact, 1.52.8 billion. And the estimate was 147 billion. So I'm sorry, 152 billion. Sorry, so 147 billion. So they beat it. But look what happens. All right. So we got 1, 2, 3, 4, 5, 6, 7, 8, 9. So within a 2 week period, yes, it had a lot of bullishness to push up, but then all of a sudden it comes cradling back down. So why is this? This is because the liquidity is there for the big, large, holders of the stock to be able to scale out. So they're scaling out, and then now it's starting to cradle a little bit. So we could see something similar. Okay, you did good in earnings, all right, and now you're gonna see that it's gonna probably inch back up here, and we possibly could maybe see a double top over here, or we can come and see a double top here or a triple. So you one, two, basically triple top, then drop. All right, that's possible as well too. Let's look at another time. All right, here earnings. All right, it had 152 billion. It was estimated 150 billion. All right, we got a nice little pop, and then we boom, 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 boom. We dropped. Wasn't much, but it was enough. You went from 142 dollars down to 127. That is significant, especially in the options world. Now watch this. You had what? A negative earnings, but then we had a nice little decent pop to the upside. All right. So it's ironic that when earnings were bad, we had a nice little rally. All right. To come up here and close this particular gap. Okay. So this gap came down a little bit before earnings, or actually the next day of earnings, it gapped down. So that was significant. But you see the pattern. When there was negative earnings, the stock rallied. When it was positive earnings, stock dropped. So we're gonna have a rally within the next couple, days, weeks, or whatever. But we also can look for some drop off. So dealing with, like I said, Walmart. Yes, for right now it's bullish, but we would be looking for some correction as well too. But not to get too technical of things. Get back to this single bar with the previous high. I'm just looking at this right here, at previous low. We see it happening. So I just want you guys to just go through charts and just practice looking at the previous highs and lows and just see how price moves. And some of you, and put in the comments, if you find a pattern, if you see something nobody else sees, like, hey, let people know. All right, don't be stingy with it. Let them know. All right, you may catch something that some of us may not have known. But this is a simple strategy. You can stick with it. You can stick with it. Some people call this ATR, some type of the range of a particular asset. Some people call it golfing bar, single bar, previous high, low, whatever. People got different names, elephant bars, blah blah blah. Some people call it uh, three par. No, I'm sorry, uh, three pin bar. Or no, I'm sorry, three bar rule. So I got 3 bar rules. Even though you use 3 bars on that one, but they all got the same concept. So you're basically looking for one of the bars to get eliminated, and then you put your protective stop loss below the candle that was eliminated, or under the structure. And so if you are using this daily and then you are setting your stop losses, you need to just be comfortable with, like, knowing that, hey, I'm gonna give myself room. Now, ideally, when you start playing around with this, give yourself room with your protected stop losses in a manner that basically allows you to also potentially be able to hedge. So what does that mean is that you potentially you can hedge, meaning that if it starts to go into the wrong direction, it's okay because you can have a hedge on. So let's say we are going long, and for whatever reason, we're going along, and it decides they want to do something like this. You possibly could have a hedge in, basically telling yourself that, hey, if price violates maybe this area, I may have, instead of having my stop loss down here, I may have my stop loss here, but also a trigger, some type of limit or stop order in place that allows that once it hits here, it'll trigger, take me, and then get out of the trade here. So basically, you hedged and you made up for what was lost. So that's a little bit more advanced for the average person probably watching this video at the moment. So I wasn't really fool with it, but that's something things you can look at. So when you start going back, I want you to go back, look at these, break it down to the lower time frame, the 1 hour after you marked it up on a daily, and then you go through and then you start seeing, okay, if I had a stop loss here, how much would I have lost? Could I have countered? And you take enough of that data in, you will start being able to formulate. So what you're seeing I'm doing is that I'm giving you guys the opportunity. You can formulate your own plans. You're gonna have to get to that. Uh, you, because a lot of trading is intuitive. Yes, it's a lot of rules based, but it's also intuitive. You may get a feel for things. You may say, hey, I don't do a 30 pip stop loss. I may do a 40 or 50, but you may also play it totally different. You may have targets that other people don't have. It's fine. Trading, when it's real live, it is subjective because everybody's emotions aren't the same. Everybody's pockets are not the same. Everybody's risk tolerance is not the same. So we all want to have different levels of profitability, losses, risk. It's not going to be the same. So therefore, I can't just give you a concrete, hey, automatically just put it right here. I'm not going to do that. It's because it's not going to work. Because some of you, even if somebody tell you, hey, always put your stop loss here, some of you get in a trade and your emotions kick in and your emotions say, oh, hell no, that's too far away. We're going to get ate up, which means you probably was too heavy in the first place. Probably shouldn't have took the trade, but guess what? It's part of learning. So there you go. Take the trade. That's what you're supposed to be doing. And see, now you're rationalizing, you're talking to yourself and you're seeing it. Hey, that was crazy. Yeah, it was. Well, congratulations. You're learning versus everybody else who just sit here and watch videos all day and don't do anything. All right. So this is your boy E-Way. I'm out. Hit the like button, subscribe. Y'all have a happy, prosperous trading week. Be safe, but also reckless. I'm out.